Okay, next we can move on to the next question then. Our 13th question, drag the correct wordings from the following list to complete the sentence of total comprehensive income. So we have learned what is total comprehensive income. It should be the addition of profit after tax and other comprehensive income. So based on that, here it should be not profit before tax, profit for the period and other comprehensive income, not profit before tax, profit after tax and other comprehensive income. That is also correct, but here profit for the period we take. What is at the end, what's remaining. So you get questions like this where you drag and drop in your exam. Next, you have drag the correct wordings from the following list to complete the sentence. The dividend yield evaluates, it should be how much you have invested. Based on that, you get a dividend. Your share as an investment. Then we can move on to our next set of questions. So here we have been given some information for 2029 and 2030. Here we have the total amount of assets. Here we have the total amount of equity and liabilities. So under the first section, we have to calculate the current liabilities for 2030. 2030 current liabilities. Now we'll see the equity and liability section. Here retained earnings and capital, those are equity. Then we have short-term bank loan, trade payable and tax payable. What are those? Those are liabilities, no, that we have. So here from that we have to identify what are the short-term and long-term liabilities. So anything which you have to pay within 12 months should come under current liabilities, and anything which you have to pay with more than 12 months or more than a year should come under non-current liabilities. So based on this, here you can take bank loan. It takes like a while to repay back, more than a year, so you don't take bank loan. But trade payables and tax payable you take. So it should be the addition of both of these, which is 2987 plus 1549. Then you get 3136. It should be answer number D. Next, you have assume no drawings during the year. Calculate the net profit. Okay, we have to calculate the net profit for 2030. Now, where do you normally record the profit? Remember, we have learned there is interconnection. Your profit will be shown in your retained earnings balance, in this balance. So here we can make a retained earnings account. Now, since it's a retained earnings account, it's an equity account, so balance will appear on the credit side. Equity increase credit. So here, opening retained earnings, we have 3624. Closing, we have 3629. Then we can balance. Here 3629. Now an item which would increase your profit is, or not your profit, your retained earnings balance is your profit. So here the difference that you are getting is the profit. 3629 minus 3624. So you get a difference of 5. So that is your profit. So that should be the answer. C. Next, you will get the amount of current assets that we have. Right. Here, these are all the assets. Anything which you can liquidate within 12 months, which would come under current assets. If it's more than 12 months, that is non-current. So here, PP is non-current, fixed asset non-current, inventory, trade receivables. Sorry, not fixed assets, fixed deposits. Inventory, trade receivables, and cash. So addition of these three would be your current assets for 2030. So you can add these three. 1007 plus 286 plus 739. Then you get 2032, which is A. Your 18th question, we have to get the changes of net working capital for 2029 and 2030. So keep in mind, working capital is the difference between your current assets and current liabilities. Okay, so we have to get the difference of 2029 and 2030. So how we will do this is, I will do it here. 2030, we'll do it here. 2029, we'll do it here. So in total, we'll get the current assets and current liabilities for these 2 years. Current assets, remember we calculated, sorry, not this. Current assets is this. Current liabilities are these 2. Remember 2030 current assets we got, which was 2032. Here we got the current assets previously in the previous calculation, which was 2032. And current liabilities also we found out, which was 3,136. For 2029 we have to get, so here you can take the total assets, 812 plus 395 plus 501. Then you get 1,708. Here you get the liabilities, 2,742 plus 201. 2,943. Now, here by looking at this, you should get an understanding. This business doesn't have enough current assets to cover their current liabilities. So that's not a good sign. So here what has happened is, deduct these and get the difference. 1235 negative. Here also we get 2032 minus 3136. 110. Now here you get a difference. Now here keep in mind, before it was negative 1,235 your working capital, but now negative 1,104. So there had been a small increase. No? Now metana plus tibbot tamai, to this value, if you add this only, you will get this value. So there had been an increase of 131. So it should be answer number D. But still, this is not a good sign. No? In a healthy company, they should have enough current assets to cover their current liabilities. So I hope you understood that question. So we'll move on to the next question then. In the next question, we have a bonus issue calculation question. So here, they have given us first equity information and a debenture issue, some debentures, and they after that say the company decided to capitalize its reserves. Bonus issue. In this regard, the company issued 2 new shares for every 3 shares at a consideration of 25. So here what happens is, you get 2 new shares if you have 3 shares. Currently we have 300 shares. So you have 300. If you have 300, you'll be getting 200. We'll be offering 200 free. Then bonus issue would be, we are offering 200 shares at a price of 25 per share. Then this will be 5 million. So how we will record this 5 million is, you remove from retained earnings 5 and you add 5 to stated ordinary share capital. So new stated ordinary share capital would be 12,500. So now new retained earnings would be 2,410. To that we have the revaluation reserve 4,500. Now when you add everything, you should be getting 19,410. So here it should be answer number 8. So that's how you record your bonus issue. We can move on to the next question. So here we have to get the total comprehensive income and change in equity during the year. So here total comprehensive income you all know, which is profit after tax, right? Now you have been given profit before tax. and interest. Profit before interest and tax, which is 2,460. From that we deduct other finance cost, which is your interest. Then deduct the tax, which is 500. Then you get profit after tax. So when you do this, you'll be getting 2,460 minus 605, 1,855. To that we add the other comprehensive income, to get total comprehensive income, which is 3,555. And equity would be, keep in mind, currently we have right issue this amount and a total comprehensive income of 3,555, and we have paid dividends to ordinary shareholders, preference shareholders. So you deduct those, minus 380 and minus 275. Then you can get your equity. You get, when you simplify, you get 6,100. So it should be answer number 8. Answer number 8. You can move on to the next question. 38. What we have to get is the net cash flow generated from operating activities. So here what we can see is we have a cash control account. Now out of these items, you have to identify what are the stuff which affects your operating activities. Now just look at the cash inflows. Opening balance you don't take. Debtor you take. Debtors you have 550. Dividend income goes under investing. Bank loan, financing activity. Sales you have 850, so that affects cash sales, your day-to-day operations. Then if you take the payments, you have creditors, daily you have to make those payments. Stuff that affects current assets and current liabilities, as I mentioned. Distribution you have 180. Rent also you have paid 40. Admin also you have 270. Motor vehicle is an investing activity. Income tax you can take, which is 125. Then you can simplify and find the cash balance. So 550. So we have 550 plus 850 minus 720 minus 180 minus 40 minus 270 minus 125, then you get 65 as the answer. So answer number 8. Next you can move on to the next part. Make a note of this definitely. Next they are asking which of the statement provides the information about an entity's resources and claims for resources at a specific point of time. At a point of time. So normally SOFP we prepare for a day. Till that day, what is the current assets, current liabilities that we have. So it should be, and how you have used your resources, your assets and all. Next, the party who is charged for governance in a limited liability company is your board of directors. Board of directors are responsible in how a company is run. We can move on to the next question then. So here we have a few information. Based on this, we will get the operating activities. Now here profit is not given. No? So we have current assets and current liabilities for 2 years. Interest expense and income tax payment they have given us. Profit for the year ending included depreciation 550 and profit on sale 335. Yeah, on top also we have a small adjustment. It says the retail earnings. So on top also we have a small adjustment. It says the retail earnings balance. They are given us the closing and opening and dividend paid. Why they have given us this is in order for us to calculate the profit. So how we can do this is your opening balance 6,475. We add the profit, right? We add the profit and uh, we deduct the dividend paid, which is 80, and we get the closing amount, which is 7,595. So you can simplify this equation and get. You can take these two values to the other side. Then profit after tax would be 7,595. This when you take it to the other side, that will be 6,475. This you take it to the other side, that will be plus 80. So then you get profit after tax 1,200. But keep in mind when we are taking our operating activities, like cash flow from operating activities, we need profit before tax. So then to this we have to add back the tax to get profit before tax. Now this you have to calculate how much is the tax expense for the year. So here what you can do is, if you want, you can make a T account, tax payable account. Opening we have 55, closing we have 70. And remember they said the interest and tax payments. Tax payment is cash credit, tax payable debit. Liability goes down. 187. Now when you balance this, you get 257 here, 257, 257 plus, sorry, minus 55, you get 202, 202. That's the amount that you recorded as an expense. So here to this we have to add 202, then we get 1,402 as their profit before tax. Then we do the adjustments that we have. Look at your trade receivables, it has increased. No? Increase in trade receivables. And also, before we do the trade receivable increase, remember there is a interest that we have deducted from the profit. So interest expense for the year should be added back. Interest expense for the year would be, again you have to make you can make a T account and find that. Opening interest we have 42. Closing interest payable we have 36. And paid for the year is 460. Cash credit, interest payable, debit. Then here we get 496. 496. Minus this, we get the expense for the year we recorded. How much we recorded as an expense. Here you get 454. So that should be added back. Because that's the expense that you recorded under your profit. Then we can record the increase or decrease in liabilities. So our current assets or your trade receivables have increased during the year from this to this. So you know when trade receivables increase, cash flows will reduce. Here 270 minus cash and cash equivalent you don't record. Trade payable has also increased. Trade payable increase, cash flow also increase because there's a positive relation. Okay, that's it. Then we can simplify and get your value. Sorry, we have to adjust the interest paid and the tax paid, the actual payments that you did. So interest we did 460 and tax we did 187. Here one more thing that we couldn't record was the depreciation and the profit on sale of motor vehicle. So here we have to add back the depreciation, which is 550, and disposal gain you deduct 335. Yeah, when you do this you get 1364. That's your net cash flow. Answer number 8. Then we can move on to the next part. That was a bit of a hard question, but don't worry, it won't be as difficult like this in your exam. So 42 I have just included a tax adjustment. So here we have to find the over provision or under provision for previous year and current tax liability. How you get under over provision for previous year is, here last year we have paid 35, but provision that we have done is 42. 42 is we have recorded 42 as an expense in the previous year, but the actual payment was 35. Here we have done an over provision. No? We have recorded more as an expense, so it should be over provision. Over provision. So next, the liability would be estimated for this year is 110, but what you paid for this year is only 80. Then you are liable to pay tax payable would be 30. So it should be 8. Over provision 7, tax payable 30. So next they say we have gotten a drafted profit. Land of the company were revalued for the second time and it created a surplus of 800. First time revaluation of this land had resulted deficit of 200. It has been correctly recognized in the profit or loss. No adjustments have been made for the second time revaluation. Second time we haven't recorded correct. So currently we have a net profit of 1100. Now when it comes to this revaluation of land, first and second. First time we had a loss of 200, but now we are getting a gain of 800. So again we did a similar type of question. First what you do is, initially what you did, you have to set that amount off. We recorded as an expense now, first time. So then in order to remove that, we have to add back 200. Add back 200. So you add back 200 to your net profit, because since this second adjustment was not correctly recorded. Then you get 1003 as your corrected net profit. Now from this, when we remove 200, how much is remaining? 600. So that will be the actual gain. The actual amount which goes to your other comprehensive income, which is 600. So then you get total comprehensive income 1900. So it should be net profit 1003, total comprehensive income 1009. So answer number 8. Then we have the last question for today. We have to get the cash generated from operations. Cash flow generated from operations is, so if you go through the template that I have given you, here you have the net cash flow generated 40. From this we have to deduct tax paid, interest paid. So then you get cash flow generated from operating. So from this, when we deduct these two only, we get this. In order to find this, here tax paid is 55, interest paid is 35. From this, when we deduct this, we get this. We get 40. So here we will do a backward calculation to get the cash flow generated from operations. So you can just go to the template, you get a better idea. Here to 40, we have to add 55 plus 35, then we get 130 as your cash flow generated. So it should be answer number C. So these are the type of questions that you can get from your chapter C. So make sure you do these questions. You can retry them again over and over again. From that you can get a better idea and you can prepare for your exam. So make sure you go to the videos that we have uploaded. Go to the tutor also that we have provided if you have purchased that. And obviously you have to do all the workbook questions in order for you to get a better idea how to prepare for your exam.